Tell you we're also investment bloggers. Did he tell you
I actually saw it on YouTube.
Okay.
He didn't tell us, but
cool.
yeah.
Cool. Are we?
We're rolling all around.
Okay. So, all right. Let's start here. We have always had an interest in real estate tech, even though we've lost money in every real estate.
Every real estate tech company we've
invested.
Yeah.
So one company that we spent a bunch of time with in Dallas was Door Real Estate. Fascinating company, really cool. We spent a lot of time researching this industry sector that you guys are in. Door has this $5,000 flat fee commission model, which was super disruptive. Mm-hmm. The problem is that we found like 20 other door type companies around the country that are doing almost the exact same thing, vertically aligned. They barely charge any commission. They make their money on titles and all the other things that you go through the process. Beautiful model, makes total sense, but there's so many of these guys, like we don't know how the market's going to shake out. Who are going to be the winners? Is it going to all going to be a roll up at some point? So where do you guys fit into this world?
It's funny, we were just talking about this.
Yeah, probably there's just a giant real estate pie, and I guess as of 3 years ago, they estimated that somewhere around 40% of home sellers were looking for some sort of alternative commission model. So either for sale by owner or something like Door. That piece of the pie is going to continue to grow. We're servicing the market that wants a more active role. So Door is great. Hauser, Homey, all those companies are great, but ultimately you're still paying someone to sell your home for you. Where we're trying to fit in is we're trying to provide all the tools that ultimately Door and these companies are going to need to be able to scale past just an individual market, city, state, region, provide all of those tools directly to the home seller and let them control their own destiny, empower them to sell on their terms, and ultimately save even more in terms of the commissions on the home selling process. So in our opinion, there's always going to be people who want to do things their own way. For instance, with the fixed, I hop up in the middle of the night. I didn't want to call someone and talk to them about what's going on. I just wanted to get it done on my terms whenever I wanted.
So first of all, thank you. Fix was our company that we exited and sold a few months ago. We had an episode on the sale of Fix. You watched that episode and then you signed up for a fixed home warranty. So thank you.
Absolutely. You're welcome.
It doesn't benefit us anymore, but
no. But thank y'all. And that is the. Getting into real estate, we were all a little bit younger, but that's sort of how we like to do things. We want a more proactive role. We want to be able to control our own destiny. We want everything at our fingertips when we want it, where we want it, how we want it. That's what we're building, is for the consumer to be able to do that. Integrate all of those other verticals that we're talking about that some of these other companies are doing, but still have the consumer, the home seller, drive the process on their own accord. Give them the tools to do it that way.
I told Brian, I was like, because there's still going to be people that want to go to your H&R Block to get somebody to do it for them, but most people will sit down and do TurboTax all day on their terms, do it the way they want it.
Talk to me about what those tools are. When I sign up, what do I get?
Currently, the way the platform works is you sign up and we're immediately pulling information around your property. So you create an account, enter in a property you want to sell. We're going to start pulling data from different sources to help start filling out information that's going to be needed for you to ultimately market and sell your property. That information is also going to be used for our software to start giving you pricing guidelines where you should be. Again, our goal isn't to say your house is worth $200,000 or you need to sell at $200,000. It's to say, here's where you can sell within this framework.
So you're going to show comps, you're going to show school district information, just like basic stats about...
Basic stats about the house, other things that have sold. If you want to sell quickly, here's probably where you want to be. If you want to sell for top dollar, here's where you want to need to be. Average days on market, different stats about comps.
How does your data differ from like Zillow, the Zestimate? Or is that one of your data points?
The Zestimate is not one of our data points. Currently we're pulling from a couple of different sources, but the main source we're pulling from is the actual MLS themselves, right? That currently is the best and most accurate data source for market conditions. So we have Travis and the software team have done an amazing job to build a very scalable, functional sort of interface that allows us to pull from all the different MLSs and then ultimately put that right in front of the consumer in an easy to use way. We spend a lot of time doing this stuff ourselves.
Do you provide them with an estimated, so you should, here's a price or range?
Right, exactly. We're going to provide them with this.
Similar to what a realtor would pull with the comp sheets that they're getting from the MLS, you're formatting it with.
So basically, you're just trying to be like an online type automated realtor almost.
Exactly. We don't want to give you a estimate. Most estimates are fairly inaccurate, but we want you to be able to sell your own way. So without disaligned interest. So a broker might tell you to sell for 10K less because they need that commission to just sell their home. But we're going to give you the data to say, hey, if you sell for 10K less, you'll be off the market quick. But if you want to hold out another month, because the average days on market, say you can hold out another month and sell for 10K more. Do that. You get to choose. You get the data right there for you to say, hey, look, I want a quick sale, or I'll wait a little bit longer for that extra 10K.
And you show them the data behind that recommendation.
Exactly. And we actually give them the ability to configure that data, right? So the software automatically pulls and says, hey, here's the comps in your neighborhood.
And you can say, I know that house, and that is not at all like my house, and so you can say that's not actual comp.
Jordan, it's
You also show like what they originally listed the house for versus what they actually sold for, and you can kind of so you get these big multivariate analysis, right?
So I think Jordan's getting excited because this is like oddly familiar to what you built for us at eCarlist with how we recommended selling your car, like the pricing for selling your car, right? Exactly the same.
I love it. I love it. I mean, I get it 100%, right? Yeah.
So you start with this listing pricing information, then what comes next?
Once they finish all of the property information, that's where they go to the pricing. The platform's automatically going to connect them with a professional photographer, so they're going to select their preferred times for a professional photographer, get notified when that photography session is set. They're going to get mailed out a sign in a digital lockbox, which is actually useful. The photographer can use that to get in. They set that up.
The same way a traditional realtor would hire a third party and get a lockbox. You're just taking that person out of the mix.
Could these folks take their own photos?
They can.
Okay. You just don't recommend it.
Exactly. Because we get a lot of that. Hey, my son is a amateur professional photographer. We've got great photos of the house, and we just explain to them, listen, we can't tell you, we're not in the business of telling you, no, you can't do that. That's what we're all about, is doing it your own way. Just so you know, the company that we've partnered with, all they do is professional real estate photography. It's very important to set the right expectation and put the best image of that home forward on the internet, get folks coming in the door. But if you want to use those pictures, as long as it's not violating any rules, you're more than welcome.
Well, because these companies have a formula of like, this is what you show, this is an order of things that you show. And
they have the wider lens, and they know how to correct the vertical lines.
Absolutely.
Every house in Dallas has one company take the pictures, and I'm sure other markets are the same.
And we get those photos back. They're automatically uploaded to their account. So you know what? If you ultimately think that the backyard gazebo is the selling point of your home, you can put that home first, and you can or that picture first, and that's going to be what shows up first. If you don't like the way that the upstairs bathroom looks, just don't put it in there, and you can remove it. We give the photos, and we empower again the home seller to sort of dictate how they want their home to be presented.
So that gets pushed out to the MLS through your platform?
To our platform, to the MLS, all the major third-party sites.
So this is a dumb question for me, just because I don't know how it works, but does the MLS actually track photos and then send those out to like Zillow and Realtor.com?
Most of the time the syndication is done through the MLS. Okay. There is a pretty unique opportunity moving forward that, as we were talking about how this space is going to play out, eventually there's going to be less and less of the 2 million real estate agents, and then there's ultimately be syndication directly to the major portals.
So do you let the lister decide, hey, I'm going to pay a 3% commission on the other side, or we're not doing that?
That's exactly the way it works. So the goal here is to save them as much money as possible, and so it doesn't do them any good, unfortunately, to offer a $5 commission to a buyer's agent. So we tell them, if you really don't want to pay a buyer's agent commission, we understand, we recommend 3%. But the beauty here is that if we get an unrepresented buyer, so someone who drives by, sees the sign, calls us directly, they come in, they submit a contract, they don't have a buyer's agent, you're not paying that 3%.
Awesome.
That's great.
So you're literally only paying for what you need. And if you have a buyer's agent who has a willing buyer and you want to entice them, entice them.
So how does your fee structure work? How do you get paid?
Currently, the fee structure for us is we have a subscription model for the time it takes the home to sell. So you sign up today. You're going to take a couple of days to get your photos taken, get your property ready, all the information there. Go to market in about 3 to 4 days on average. Takes on about average 30 days to get under contract. You close in about 45 days. So from the day you sign up to the day you close, you're paying $7 a day. We don't ding the card every single day. That would be ridiculous. We just pay 28-day billing cycles. And that way, if you want to, as Travis said, you want a price to sell quick. We have home sellers that have signed up and been under contract and closed within 5 days, and they pay $35. We've had other people who have been stationed across the country or across the world. There's actually a gentleman in San Antonio, and selling a $250,000 home took him 18 months to sell. Told him, we have systems to let people know, hey, you've been on the market longer than other homes. Hey, have you considered a price drop? Do you want to get this thing moving? And he was like, listen, I'm just going to wait until the right buyer comes along. I think he ended up paying somewhere around $1,800. I forget what the exact math was, but he looked at it as I'm still saving.
It's still less than paying 3%.
Exactly, or even some of these other discount brokers, but ultimately he was just more taken by the fact that he got under contract twice, and he was like, I don't want to work with this buyer.
So you piqued my interest. Again, I keep going back to, it feels like a really noisy industry, a noisy market. For us, it's all about customer acquisition.
Mm-hmm.
How much does it cost for you to acquire a customer at scale, right? So what does your traction look like? When did you start doing this? Where are you today?
So took on our first customer in January of 2013 here in Austin with a MVP WordPress site. Again, we knew where we wanted to be. If you ask Travis, I had no coding experience, but it was little coding experience from some engineering classes, a couple of online courses, but me and Aaron at the time didn't know anything, but we knew there was something here. So we said, let's get something out of WordPress. Let's fake it till we can make it. Let's see what the market says. And took on the first customer in 2013 in January. Things just started to pick up here in Austin. Eventually, some of the market demographics, these real estate investors who started signing up early on, they were also doing business in San Antonio. We started picking up business in San Antonio.
Well, so you have a lot of real estate investors on the platform.
Yeah, we do. We have a lot of, it does make a lot of sense. And for us, it's early on, it's been a great customer segment for a couple reasons.
What markets are you in right now?
Currently, we're in, I think, 14 markets in Texas and then the 4 major metros in Florida.
Well, that's it. Now, a question, why wouldn't you just go bigger? Is it expensive?
Go wider?
Yeah.
That is a great question. Right now we've set the foundation for going wide, and to a certain extent it's a little bit of a land grab, right? This is a noisy space. We know ultimately there's going to be a very, very, very large portion of the people in the United States who are selling their home with some service like ours. And the quicker we can get wide, the quicker we can start to establish network effects, the better it's going to be to start growing up vertically later on.
What percentage of your customers are real estate investors? Of your homes listed?
Right, about 50%.
Okay.
50 to 60%.
I don't know that that's bad or good. I'm curious because it's different. It's an interesting model.
It is very different, and if you look at it, 7 to 10% of homes that are sold across the United States, varying from market to market, are real estate flips. And then that's obviously to go up and down with market swings. So the end goal for us is never to be, hey, we're going to be the platform for real estate investors to sell their house. What we are doing early on is using that as a way to keep customer acquisition down until we can get vertically integrated to the max. Because as you talked about those other things, those do drive revenue. Title, mortgage, insurance providers drive revenue.
Yeah.
For the longest time, our average revenue per listing was $630. So we could spend $250 to $300 to acquire a customer and still sort of bootstrap our way along. Now that we have gotten to $1,500 per listing through the integration of title.
Is that what you're averaging, about 1,500 listings?
Yeah, and that's just from the listing services and title.
Is that on average?
Yeah.
It's pretty good.
It's really good.
And what is your cost of forget about cost of acquiring a customer. What's your cost of
Delivering the
service on average?
The
variable
cost for software and human resources is about $150.
Okay.
So you're talking shipping, the shipping box, the professional photography, $150 on average.
Do you have to pay the MLS anything? Okay.
I mean, we pay the MLS to be a
But it's like
part
a
of the
licensing
MLS.
fee, but that's a fixed
Yeah,
deal.
it's not like a one-time fee.
So
for
what's
something.
stopping you from going bigger then? Because it seems like the margins are there.
Yeah, my question is, so is it contractual stuff, like are you using direct contracts, and then if you go to Oklahoma, it's totally different?
There's a little bit of that. It is not as, I mean, we could, like right now, we could ramp up Beaumont, for instance. We're not in Beaumont, if y'all are familiar with that is. We could ramp up Beaumont and be taking customers in Beaumont in about 24 hours. Easy breezy.
Yeah.
Going into other states, there's legal nuances, there's market nuances. We went into Florida really to figure out what that's going to be like. And the traction that we saw in the first 4 months in Florida, first 5 months in Florida, all of those major metros outperformed the first 5 months for the major metros in Texas. So we know the market is there. Really what is prohibiting us from going big at this point is just growth capital, right? That is it. We have a foundation for the software perspective to scale, at least on the listing side. One of the things that, as we've now integrated title and we have the buyer's agent revenue, obviously all these listings, they generate a lot of leads for buyer's agents. And that was one of the ways that we sort of bootstrapped the company early on, is to turn those leads, divvied them out. We got a percentage of those commissions. Scaling the title and the buyer's agent stuff aren't as easy as just scaling the listing side. So as we do that scaling, we want to be cognizant of our numbers, right? The LTV to CAC, and meaning that if each listing in Texas is going to generate around $1,500 plus another $400, $500 in ultimately buyer commission revenue, a listing in another state's going to be $600. And the listings, we have a very good reoccurring business with the real estate investors. We have some very good network effects where we have a great track record here in Texas, where we're able to get new listings and customers at a very low cost. We've seen that it's not, if we're doing $250 here in Texas to go into a new market and do, it's not going to be $250 day one. It eventually gets there over time. So the right balance between keeping the LTV and all of this.
So lifetime value.
Yeah, the depth of the revenue here in Texas with the slightly increased acquisition cost of new markets is just the fine balance we want to walk.
So what would you do with the growth capital? Like if you got $1 million today, what market would you go into, and what would it be used to do? Like what do you need to do in those markets to get launched?
Really just sales and marketing functions. We've already set up the business infrastructure, and Travis has the software infrastructure to start the listings in all those markets. So we're set up, we're ready to go in Washington, Arizona, Colorado, Illinois. We can do California.
What does sales and marketing mean to you guys, though?
Right now, we started, before we took on the funding last year, we were a company that by and large is all outbound, right?
What does that mean?
It means that all of our new customers, for the most part, were generated from an outbound sales function, or from us sponsoring real estate meetup events.
So those people on phones, like what does that mean? What is it actually? What would be
cold calling.
Who are you cold calling? Like real estate investors or?
Real estate investors, we target the real estate investors by sponsoring real estate investor meetups, right? Just like you might come to Capital Factory for a, seed investing, early stage investing thing to meet entrepreneurs and late stage investors. We sponsor a real estate investing network event where all of them go to Deal Source.
How are you getting non-real estate investors?
Cold calling, and now we actually did.
Who are you calling? Like
we have a couple of different lead sources that we'll call them just high value, right? So these are people we know that are currently trying to sell their house, and we've developed a very good, repeatable process about how to take, thousands and thousands of people, turn them from thousands of leads into 500 marketing qualified leads, put them into a drip, turn those 500 marketing qualified leads into opportunities, ultimately close them down. We also now have a actual marketing infrastructure that we've set up over the last year. So SEO and some paid search that yields amazing results, specifically here in Texas. They will ultimately start to yield. It's a infrastructure that's built not just to target Texas, it's built to generate leads. Like I think it was yesterday, we got someone who came to the website from somewhere in New Jersey, right? And as we establish a presence through some of these early customer acquisition methods, so cold calling and real estate investor sponsorships in these new markets, once we establish this presence, that inbound machine starts to pay dividends over time.
So you guys are doing, I think, you're doing a couple $1 million a year right now. You're almost profitable. You're like right there. If you got $1 million like growth capital, what does that do to your business?
That gets us from roughly $200,000 to $250,000 a month in revenue to approximately $500,000 to $600,000 a month in revenue over the next 6 to 12 months.
And definitely profitable at that point.
For sure.
So double, triple your business.
Exactly. Double, triple our business, profitable. It allows also to keep the acquisition methods that we have, that we, I don't know if you call them hacks or bootstrapping, whatever, but they've been great to us, and they provide a fantastic blueprint for us to keep very low acquisition costs, as low as possible in the new markets. The marketing stuff, ultimately the SEO stuff, is going to be what is going to go from 500 listings a month to 1,000 listings to 1,500 listings a month, once you can get that keeping the foot.
What happens if Redfin and all these other companies tomorrow say it's commission free?
No more commission.
No more commissions.
We're now $5 a day.
We want to go back. So
Robinhood, what Robinhood has done to online trading, which we're an investor in Robinhood, right?
Yeah,
So
that's awesome. And so because Travis and I were talking about this yesterday. Eventually, there's going to be someone who does that, right? I don't know if it's going to be Redfin. They're publicly traded, so that puts a little bit more of a kink into their system from a revenue perspective.
Well, unless they're just doing it to get the service, like to get mortgage and to get...
Exactly.
Yeah.
But let's say there's another growing startup, like, for instance, Door, who just says, you know what? One of these days, this could be much more profitable, all the ancillaries.
I think Robinhood should just buy one of you guys, right? Because they're building such a massive base of millennial and Gen Z relationships for finance. I see
It would be the natural way to sell your house.
I'm going to predict right now that Robinhood in the next 5 years buys one of you guys, and I see that happening.
What's interesting? Tell them about what Chabib used to say about going deep versus wide and how that helps us on the...
Again, early on, this subscription model for us, it was a way for us to create a unique value proposition in a very crowded space. Ultimately, the differentiator for us is going to be, do you want to go and pay $0 to somebody else to do it for you, or do you want to use a platform and do it yourself from your phone and your tablet whenever you want? And again, we know that if we've taken our revenue from listing from $630 to $1,500 just by adding title, we can get it up to $2,000, $3,000, $4,000, $5,000 per listing with other things in the future. And so that $600, not that it's not nothing, but it becomes much less relevant.
Along the way, you're able to just add one more thing. And are you doing the photos now? Are you subcontracting that and taking a profit, or is that a direct relation?
There's no profit to be taken because it's baked into their $7 a day. We don't charge them extra for that. So we are currently, it's just about, we don't want to reinvent the wheel on real estate photography. So who provides consistent, relatively affordable, high quality.
But you should be getting some money on that vendor relationship, right?
For right now, we're not. I mean,
He's saying you get that for $7 a day. Yeah. You get, so like, they just pass, their profit through to paying for the...
Oh, so these guys pay for the photography?
Yes.
Included in the cost. Gotcha. And then
How much does it cost you? A few $100 for photography?
Well, if you get a good relationship with somebody who's operating at scale, you can get exactly, economies of scale type thing. Yeah. Right, so we're talking about $98, I think, is the last time it was, we repriced it out. Yeah. So that's where that $150 per listing comes in.
So most customers, it pays for itself.
Exactly, and that's the way we work is, if your home sells in 7 days, if you close in 7 days, you're only going to pay for $35. If you decide you don't want to sell anymore, that's fine. You can take your home off the market whenever you want. There's just that 1 month, that first 28-day commitment, so that covers all of our...
So what other...
minimum?
Okay. If you don't sell, you got to pay 28 days.
Yeah, and you could take it off whenever you want. You can take it off on day 14 or day 700 if you want. Yeah. But if you take it off on day 14, you're still going to pay that.
It's actually better for you guys if it takes 6 months to sell, but the customer would try to figure out their pricing that way.
Exactly.
What else can you add to the revenue? You have title right now. You're making money there. Where else are you making money?
Currently, we make money from the subscription model, title, and then the leads that we generate from these listings that turn into buyer commissions.
Buyer commission. Okay, where else can you generate money that you're not today?
Mortgage, service providers, home warranties, all of the
Inspections.
Then once you actually get into title, there's sub ways to generate revenue in title that we didn't know about till we got into it in terms of like tax returns.
Are you your own title company?
Correct.
I like
That was, we didn't start that way. We partnered with someone early on because, again, the idea is we wanted to create a very consistent customer journey.
Is there title money in every state the same way that there is in Texas?
For the most part, yes. For Georgia, for instance, it's handled by an attorney's office. So in most states, there's two components to the title game. There is the escrow fees. Hey, we're going to hold the money in escrow and distribute funds once the property closes. And then there's the issuance of a title insurance policy.
Yeah.
In Texas, there's both components. Few states like Georgia, there's only one of those components.
But you can make substantial money off title in pretty much every state.
Correct. And it's
But you have to have an attorney in every state, right?
we don't have to have an attorney in every state. We like, for instance, in Florida, we can launch title without an attorney.
Okay.
You have to become licensed with the Florida Department of Insurance, just like we're licensed with the Texas Department of Insurance.
But you don't even have to have an attorney in Texas. Oh, I thought you had it. Okay, cool.
No, it's and title is very interesting for a couple of reasons. One, it is a racket because it's mandated by the Texas Department of Insurance, all these fees. But more importantly, for us, we always looked at it, and listings are the leverage point, right? That's how you're going to get into as many facets and control as much of the transaction as possible. The next biggest point is title.
Are you doing business in Dallas?
Yeah, we do.
It's our biggest market.
It's the biggest market, yeah.
Oh, is it?
Yeah.
That's cool.
Can we talk to some of your customers? Can you just maybe refer us to a couple as part of our due diligence process?
And when you list, you get a yard sign. What is your branding? What is your consumer-facing brand?
ListingSpark.
ListingSpark.
So that's one of the things that we, whether it's the for sale sign, whether it's the listing showing up on the internet, all of that stuff comes through us for a couple of reasons. One, we discovered very early on that a home seller doesn't want to be fielding the 30 ridiculous calls from nosy neighbors or whoever may or may not be interested in their property.
Yeah.
Two, it is a way to actually generate leads for any other real estate transaction, right? We have a gentleman who signed up yesterday. It was his third listing with us. He saw us originally from a yard sign. So he's like, oh, Tim's selling his house. ListingSpark. Goes to the website. He's
What's that? And
boom, I'm doing
figure it out real quick.
It's not terrible. I'm not like in love with the brand.
Yeah.
I hate saying that. I'm just not in love with the brand. And have you thought about that?
Ever?
Yeah, we've thought about that to a large extent. I mean, this was something that the genesis of where we wanted to go with this was, 2008, 2009. We started conceptually seeing very early, people want to do things on their own. They're asking for what would this ultimately look like? And so then we started putting the wheels in motion. 2011, 12. So this is you want to call it dated, you want to call it stale. It's from something that we came up that long ago. So we've not.
Are you talking about just branding in general?
ListingSpark.
Yeah.
ListingSpark, and when I went on your marketing collateral, I wasn't in love with it.
Yeah, and that's right now the brand itself is not something we're tied to. We know that. I'm gonna look at it this way. I think in the back of our heads, we're all very aware that if we want to turn into
It's a TV.
We have 2 minutes.
There's going to be a rebranding to go from a company that's doing what we're doing to a $100, $200, $500 million company. There'll be a rebranding.
Yeah, but all the value is the actual platform and
Correct.
ListingSpark itself can be a disposable brand that can be rebranded. Door, I think, is amazing. I think there's some really good names out there that we just need to figure out what the right one is. This, ListingSpark, when I saw it, the way it got abbreviated on my calendar invite for this meeting, it was ListingSpark. I didn't know. I thought it was a parking company.
Can we reset real quick? I think we need a little more than 2 minutes. Okay, so
Wait.
Wait for it.
And
let's go.
action.
So what I think.
Wait. I said action while you were talking.
What I think I really like is the automation here. Am I correct in thinking that there's no human interaction between your company and the customer selling their house, potentially?
Potentially. right, that is where we want to go.
Because that's not where Door and all the other companies
Correct.
are.
A little customer service, but it's a really do-it-yourself product.
Correct. The goal is to be completely humanless to the extent that that's what the consumer wants.
Is anyone else doing that right now?
Not that we know of. And again, the goal isn't to say we want to be every transaction to be humanless. It's to be every transaction can be humanless. And a perfect example is that was always the goal. We're like, this is what we're going to do. You're on your own. We started hearing very clearly at certain points, some people want some help. Right? We didn't know, but this wasn't around at the time, but it's very similar to what TurboTax is doing now with their CPAs on demand. All of a sudden, this is someone who sold 3 houses before I know what's going on, I know what to do, just give me the tools and resources, I got it. Then they get 4 offers in, one of them's an FHA, one of them's a VA, 2 of them are low balls, and he needs a lease back. He's like, what do I do here? Okay, well, he raises his hand, and then we just ramped up a transaction coordinator service, and it's $800 paid at closing, and you only take advantage of that if you want it.
What's a downside to your company? Do real estate agents on the buy side hate you guys?
Some of them do, and some of them are starting to see the light. And this is not unique to us. You know, you've heard these horror stories from.
Why do they hate you?
Because we're obviously moving their cheese, so to speak, right?
Well, because a lot of these guys make money on both sides, right?
They make money on both sides, but it's also, if you're a real estate agent and you want to list 4 homes a year, and then all of a sudden one of your neighbors who you thought were you going to help them sell their house, they go with ListingSpark because that's what they want to do, or it's like every conversation they go to have with any of their potential clients, the question inevitably is going to turn out, well, what are we going to do about this 3% commission? If I can go to Door or ListingSpark and do it for this, why am I going to pay you 3%? We feel, and there's other people that feel this way, that eventually as the market corrects itself, there's going to be actually more value for the real estate agents who are doing the hold your hand thing, because if you don't want to do it with ListingSpark, you don't want to pay on this flat fee model with some of these other scalable brokerages, you really want Steve, the real estate agent, to be your guy, to be incentivized to sell your house, you can actually charge a higher commission at that point.
I see it differently because I've got, we just sold and bought a house, and we had our agent did a 1% to get on the sell side so we could get our buy.
Correct.
You know what I mean?
Yeah.
So they want that buy commission.
Right. They want they want the buy commission, but that's going to be going away too.
Yeah.
I mean, that is not something that is going to be there forever.
Can you make money on the buy side of it? Is there a buy side for you guys?
Yeah, that is how we are currently, up until this last year, half of our revenue was coming from buy side commissions. So we would have these hundreds of signs in the yard, or our sellers would ultimately, just like you, hey, I'm selling my house, I need to find a new one.
Yeah.
Do you have an agent can help me? We do right here.
So if I use you as a buy side agent, how does that work? Because what's the advantage to me? Do you pay me back the commission? Because if the seller's paying a 3% commission, do I get that now?
Well, currently, if you are just a buyer, or let's say you sell your home, pay $7 a day, and you say, I want to go buy my next house. Well, that next house, there's going to be a commission offered to whichever agent is representing you. You don't have to pay out of pocket. If you work with one of the ListingSpark agents, you get ultimately 1% of that commission back.
And then you guys get the 2%.
Correct. We get the 2%.
So you have agents.
Correct.
Interesting. How many employees do you guys have?
Currently, we have 9 full-time employees here in the United States, another 14 in the Philippines, and then all
Are the Philippines engineers?
engineers and some data entry folks.
So on the buy side, you get an agent, like an old school style agent.
And on the sell side, you can opt in to get an agent if you need help
Right.
at kind of a fixed price.
We do our agent work in a combination of ways. You can opt in for just the traditional agent, but what we've also done really well with early on is we know the market's changing for how buyers want to interact with their agents. Instead of having Steve, the agent who drives you around, shows you every single property, and then is in 10 different places at once, we have Steve as your agent. He is your point man. He sits in the office, and then he utilizes showing agents. So that way you don't have to worry about his availability on a hot market.
But that costs extra to get Steve.
No, that's actually the discounted model.
In the $7 a day model?
No, that's on the buy side. On the buy side, on the commission.
On the buy side, okay. On the sell side, you don't get an agent. You don't get anything.
You don't. If you don't want
Let's do it yourself and tell.
If I need someone to show my home for me,
We have that's one of the reasons we have the agents. So the way it will work is if You have a sign in the yard and you're selling a home and somebody drives by and says, oh God, I'd really like to get in to see this house. We say, okay, great, we have an agent. If you don't want to show the house and you're like, no, I'm not available, I don't want to show the house, we say, okay, great, we have an agent. Our agent will go show the property for you because it's a unique entryway for them to potentially get a lead.
Oh, so I don't have to pay extras as a.
That's included in the $7.
That includes $7.
So it's a way for the agent to get a buy side lead.
Yes.
If the potential buyer doesn't have a buyer's agent and they just call the yard sign,
Oh, but if they do have a buyer's agent and the buyer's agent shows that house,
Then you pay, then you pay, you offer, whatever commission you're offering up front is what you would pay that buyer's agent if that buyer really wants to stick with their agent.
Because the buyer's agent is basically going to look at listings, and if there's a 0%, they're going to be like, nope.
Unfortunately, yeah.
Will they do like a 2% house, or will they will they only really show 3% houses?
Exactly, price point market. So it's like if you're in let's say you're selling a home, if you're familiar with Austin, out in Georgetown, one of our first listings that we did with a less than 3% commission, it was 1.5%. It was a $700,000 home where the average days on market was 100 days, and there just wasn't a lot of inventory. And she had been a real estate agent before in the past, and she's like, listen, I'm only offering 1.5%. They're still going to get a, $10,000 commission.
Yeah.
That's great. It's a great way to make some money, but I'm not paying the full 3%. And she sold in her terms.
this is so funny because legally even if it's 0%, legally doesn't the agent have to expose that home and show that home?
It's supposed to be an ethical concern from the state licensing.
Yeah.
They're supposed to be their ethical obligation is to do what's right by their consumer.
When they're sworn in as a real estate agent. Isn't that what they're supposed to do? Like a doctor is supposed to do certain
Keep in
things?
mind, the unfortunate situation for a lot of real estate agents is there's a lot of good ones out there who would do that, right? There's a lot of good ones out there. If there was a 0% commission, they would say, listen, this home is offering a 0% commission. I'm going to show it to you because I want to get the right house. Is there a way we can work out some sort of commission, Mr. Buyer, just to make sure I get paid? There's also a lot of not ethical agents out there. Ultimately, though, more and more, those houses are making their way out to everywhere on the internet. And so if you're a buyer and you're working with the buyer's agent and they don't want to show you this house for whatever reason, you're going to find a way.
you still know it exists. If you know the neighborhood you're looking at, you know every house.
You're on Realtor.com. You're on Red Door.
Exactly.
I feel like this is like a multi-decade shift in the industry. It's happening. It's just happening so slow that the Doors of the world, and I love those companies too, but like for them to stay profitable over this multi-decade shift is really hard because you have to wait it out. Right. You guys need to just survive and slowly get bigger, right?
Educating people literally like decades at a time, right? Because people don't move. Some people move every 3 years, but some people don't move in 2 decades.
7 years, right?
There's a couple of things that have happened. You've seen these iterations of this shift, right? So there was companies, alternative models that existed in the 80s called like assist to sell, who actually still around today, and that was
There's like 1%ers, and there's like all kinds of
1% realty, and ultimately, not until now has that progress started to move quick enough, and the technology exists that is going to allow a company like Door to scale enough to vertically integrate everything quickly enough to get past the point of just charging, $5,000 on a listing. But now that they can do things at scale with technology, our goal is to dominate just as big of the real estate pie as possible, right? We know that there's going to be someone who's taking this self-directed approach and they're going to kill it. We want that to be us. The weird thing is that in the back of our minds, all of the stuff that we're building is going to be very enticing to those other companies. Like Door, awesome people, like those guys a lot. They're not a software company, right? Those aren't software companies. They're going to get to a point where they're going to, if they want to go from this amount of listings to 10 times as much without adding 50 times the headcount, they're going to need software to do it.
Are there other competitors right now in the software company dollar per day listing model?
No.
None at all.
Not that we have found, no.
So is there any goal for you guys to try to be like a Red Door, Redfin, sorry.
And I feel like Redfin, these guys all think they're software companies, just like they all, I think Door is going to think they're I mean, because they do have good tech too, from what I understand, but they have a human model, right, as part of their business.
Discount human model.
Even Compass, right? Compass, if you're familiar with them.
Very.
But they probably are going to spend more in software in the next 30 days than we're going to spend over the next 5 years, right? They have got billions of dollars to spend, but they're building technology for their agents. They're
Yes.
not building software for.
They're building a better traditional agency,
Exactly.
and you want to disrupt the traditional
You're
market
building
altogether.
an autonomous real estate sales model.
So we have one customer success. We have a customer success manager, and then a part-time person here in the U.S. And then that allows the software allows her to basically be the customer success element for 500 without.
Okay, what I want to see you guys do as an investor, as a possible investor, I want to see you in 50 states or something close to that. Even if you're normally I would say the opposite. I want to see how deep you can go in one market. I do want to see that too. I want to see how deep.
Both
you
at
can
the
go in
same
one market.
time.
I don't think
Yeah, at the same
50. I
time.
think at least 5 or 6.
Well, I want to
right?
no, I want to see you guys in like 35 to 40 or 50 states, preferably. I want to see how deep you can go in one market. I want to. Oh shoot! Hold on. Sorry. This is
He's falling apart.
This is really important. Damn. Tape.
This is what I was asking you
Yeah.
about earlier.
This is
Yeah.
this is the
About your bid.
fundamental
Yeah.
question we've been asking ourselves even 4 years ago: is
Yeah.
wide or deep?
Well, you asked us earlier, like, why aren't we in 50
Okay.
states?
Yeah.
No, hold on one second. Sorry.
That is the thing we settle on when you said, right? Start doing both, right? And there's going to be some. I guess I'm talking.
You have to wait. He's retaping his microphone on.
I feel like we're in a movie.
I didn't know there
a
was
movie
any
with,
filming or
what is it?
anything.
We're on the wire in the movie. Is an informant.
Yeah.
Sometimes I just wear a microphone all day, and it's kind of weird because you do see it a little bit, like underneath.
I want you to build out your tech model to be operating in 50 states or something close to it. I also obviously want to see how big you can get in one small region.
Both at the same time, going deep and broad.
We have to see both, because I truly believe that once you pull that off, there's a partner out there. It could be a Robinhood, it could be a private equity group, it could be a VC that can infuse you with the $20 to $50 million you need to then deca down on your business model when the timing is right, because you can't be too early, as you know. But at some point, I think in the next 5 years, the timing is going to be right to go all in on the automated sales model. If you have the infrastructure set up nationally to pull that off.
So how challenging is it to, aside from having a person dealing with things, but like legally and then engineering wise, like how difficult is it to go into a state?
Engineer, we actually have the whole playbook. So this is where Brett was about to start talking about why we went deep instead of wide. It was kind of our investors guiding us to go deep and get title, engineering wise, and they kind of wanted us to do both at the same time.
Yeah,
right?
and
and so
resources are finite.
Yeah, and we have the engineering structure. So to add a new market into the application, it's probably about a day. It's not very long at all. We get the data feed.
There's MLSs. Every MLS is different. There's no single source.
And they're regional. They're not even statewide. They're regional, right?
How do you guys integrate with an MLS in a new market?
See, that's really powerful, and we didn't realize it at the time, but there's businesses that just do that. And we were so bootstrapped, we weren't looking at those businesses, and we were like, we have to do this ourselves. Well, I was, because I'm cheap. But so basically we found a way to normalize all of the data and easily add, we call them MLS miners. So we create this new little MLS miner that goes in and is solely responsible for each MLS.
In whatever format they have, you can just assign fields and match it up, and now you've integrated your own without having to use an aggregator.
Exactly, and we basically just we have a translation sheet that integrates it into our little language, and then we're ready to go. As far as business-wise, we wanted to get those data sheets as early as possible, so we actually set up brokerages in Colorado, California. I think we still have Colorado, Washington, and so we set up the business infrastructure to actually expand. However, it was like, do we do title or do we expand? You can speak a little bit better on that. But.
Yeah, ultimately we went for let's optimize for unit economics. We learned a lot from Florida, and enough to say with confidence that we know how to go into a new market and we know what needs to be done there. We know that it can happen. So when we have these discussions, it's not like, no, guys, we don't need to go wide. We just need to go deep. It's like, no, we do need to go wide. We know how to do it. But at that point in time, it was just optimizing for title literally doubled our revenue as opposed to picking up another 20% of listings.
And talking about going deep, Dallas is your biggest market, right? Is it like 50% of your revenue or something like that?
It's
right?
probably, I'd say, about 30% of our revenue.
How big could you get in Dallas?
That's a great question. I mean, we really think that you look at someone like Redfin, I think they're a 3% market share in their home city of Washington.
Okay.
I think we think that getting somewhere around that point, we're doing like a 0.5% market share. So if there's, for 100,000 homes sold in, in Dallas, getting to selling, 4,000 to 5,000 homes a year in Dallas.
Is that like 4 to 5% of Dallas?
No, that would be like a 0.5%.
A half of 1%. So you think about half of 1% is, and at half of 1%, what would that mean in terms of revenue from a city like Dallas?
That would, if we're doing,
like, how big are you right now in Dallas?
We're probably we're picking up about 40 or 50 listings a month in Dallas.
Is that like 1/10 of 1%?
Yeah, whatever.
So you want to grow like 10x in Dallas, basically.
Yeah. We think we can.
That's achievable.
Yeah.
It's 10x in Dallas.
So 50 listings a month, and just from title and listings is going to be $7,500. Is that right?
$7,500.
So 1,500 times 50 is what? That's my math.
So what, you're at 50 leads a month?
50 listings a month. Each listing is generating about 1,500.
That's where you are today.
Correct.
So you think you can get to about 500 a month in a city like Dallas?
Correct.
Okay, so growing your revenue from, let's call it 100,000 a month to $1 million a month in a city like Dallas. So, and then nationally that puts you at about, let's call it 40 million a month is where you think you can be nationally at scale, which is
with our,
you get like major metros.
Yeah, with our current model. That was, you say 40, that's odd plan. That's what we called it about 2 years ago. We called it the 40 and 30. So getting to the 40 major metros in 30 months.
Yeah.
That was with the old, just with the listings and buyers agents. But now that we have the title and stuff.
and that puts you about $500 million a year in revenue, roughly.
Right.
So yeah, 40, yeah.
Okay. What I love about this is I don't think you guys need to win. Like, I don't think that, you don't need to win, right? So I think there are a certain number of companies that are going to come out as winners over the next decade in the new world of real estate, right? And I think it could be a dozen companies, and they all have slightly different variations. Door could be a winner. You guys could be a winner. Redfin, whoever it is, and continuing to suck that business out of the old model. You just need to survive. You need to be one of the winners, right? 10 years from now.
It's not a zero-sum game at all in real estate.
Well, yeah, especially with the amount of, I guess, money that was currently being spent there and the market size. And nobody likes to go out and say, hey, we really want to shoot for 5th or 6th place, right? But, I mean, truth be told, 5th or 6th place, if you're talking about this alternative world
with a profitable business model is good.
It's amazing.
That's what I like about you guys. I actually like the profitability of your business model relative to what I'm seeing with a lot of the others that are still human-centric.
And I see the future will be, you guys will hopefully dominate in some markets and exist in other markets and barely exist in other markets, but there's going to be a consolidation, and you just want to be one of those with your hand up when someone's acquiring.
And by the way, with a profitable business model.
Yes.
That's the difference.
And yeah, that is because we've thought about that as well. Even if it's not a direct, let's say, competitor to how we're doing it, but it's someone who's in a close enough space like a Door or Redfin or something like that, or we'll call it Redfin 5 years ago, and they're just wanting to get market share. And for whatever reason, our model and our customer base has taken a stronger hold in markets that they weren't able to capture. They're going to just turn in and say, okay, well, let's go ahead and do some sort of acquisition here. So we think there's, like I said, nobody likes to shoot for 5th or 6th place, but I don't want to say pipe dream.
But you're in 5th place, you're still a winner.
Yes, exactly. That's a perfect way to put it.
Okay. Cool. I'd like to, as follow up.
We want to follow up.
I love to meet with a couple of maybe one kind of recurring customer, maybe like a real estate investor in Dallas that uses you guys, and I would love to meet with a non-real estate investor that maybe has experienced the service. Just to, if someone that's okay, maybe talking to us on.
Yeah.
In this format.
Yeah, I have a couple of investors that would love to because that's how they grow their businesses, doing stuff just like what y'all are going to say with
Right.
love for this format. And he also happens to be someone who is investing in businesses in the real estate space as well. Just from a
Is he investing in you guys?
no. Well, he's
We're talking.
we talked about a couple of different things, but he's a real estate investor, so he's building a brand around that business.
Yeah.
And so he's used us a lot, and he's a great partner for us.
And I have a guy too. I'd like to maybe have a look. I have a real estate investor. I'd love to talk to him who's not using y'all, just to see what he.
Perfect question.
He might
So
be.
when you said the
I may be.
50 states and then one deep, that obviously makes a lot of logical sense because it's very
Even one city deep, not even a state deep, one city deep.
it's very easy to then just extrapolate. Okay, if this is done here, and they already have that traction in those, you just build up, right?
You just solved all the MLS challenges, you solved all the legal challenges, all the paper, all that stuff, and then, if you get some more investment, you can just light a fire.
Throw marketing
It's
money
not
into
even
this
how much
market.
money you can make in one market. I want to know how much of that market you can get as a customer base. Can you get 1% of a market's listings? That's what I want to know. Or 2%, or 3%. What's realistic for a company like yours to get in a market?
Using the outreach marketing that you're doing, whether it's online search or outbound phone calls.
Perfect. So deep isn't necessarily maximizing for revenue;
Nope,
it's for
absolutely not.
market share.
Yeah.
Okay.
Because I believe you can maximize revenue better than you are today, because that just makes intuitive sense when you start stacking on.
You just do that later when you've already got a bunch of revenue, or you wait until somebody acquires you, some big company that then.
By the way, that's what a Series C or D investor would be interested in.
Okay.
At this stage, we're not interested.
Like, how do you squeeze value out of this? But
Okay. So then the next question, from a time frame perspective, obviously, 50 states.
It's not going to happen overnight.
Okay,
Yeah.
gotcha. Okay,
Yeah.
so when you
And by 50, 30 would be
Right.
more realistic first go.
But even just to see that you're dabbling in those markets, that you're set up and operating in those markets, so that you can go to a national convention and actually feel comfortable speaking to real estate investors, knowing that, hey, we're in most of the states you do business in, we're in, right?
Would you say that would be a good goal for a next round that we're looking for, as opposed to waiting till you're in your Series C?
So you're saying
Like
that's,
next round.
that's a goal for use of funds on like a Series B?
I'll tell you this, the most important thing is showing how deep you can go in one city. If you had to pick one thing, that's the most important thing. To show us that you can do this in one city, we're more likely to believe that you can replicate that in 50 markets. The biggest question is, how deep can they really go in each market, in one market, right? Because if you're only going if you can only penetrate 0.1% of each market, that's not really that interesting.
And to me, instead of 50 states, it's 50 markets where there are homes being bought and sold.
Yeah.
There are states where you may never want to be.
Idaho, North Dakota.
right.
That's we've always looked at a from a geographic perspective as a city as a market as opposed to a state for that exact reason. Dallas is bigger than probably North Dakota, South Dakota, Wyoming, all of those combined.
Got to throw this out there. We're beating door in Dallas. Just enlisting. I had to throw that out there. So that you feel that's a better, that should be the goal for like a Series B, is get wide and just dominate a market.
Yeah. And by the way,
two.
Or two. Yeah, well,
I want to bring we have Robert Elliott into the conversation as well. We're very close to Robert Elliott. He's a major Dallas builder, and he has his own real estate firm. He has like 60 employees in his real estate firm. He's a real estate investor, like all the above. So he was going to start this a couple years ago. He met with us to talk about starting exactly what you guys do, and we're like, we're not operational anymore. we're not getting involved.
That sounds like a lot of work.
Way too
making barbecue.
And at the time, I think our logic was it's just a race to the bottom. Yes, you can undercut door, and then they can undercut you, and then there's
We do not want to be associated with the race to the bottom. But truthfully, knowing that
there's all that ancillary
There's value
money.
outside of just the listing. Yeah.
Also, honestly, listen, we've been following Robinhood since they started. I know the founder of Robinhood, when he first started, did not invest. I invested through a fund. We recently invested direct into Robinhood, but seeing what they've done in brokerage and finance, they went right to the bottom, and now they're a $7 billion valuation company, right? I believe maybe going to the bottom right away.
If you could find a way to make this $0 a day.
That is again. That's the
Money in title and mortgage and all these things.
not just blowing smoke. That's the story we've always told. There probably wouldn't be the original conversation was, can we get enough funding to survive with $0? And if we could, is there going to be some weird buyer dilemma where they're like, if I'm not paying for this, am I getting any service? So we're like, do we need to overcome that first, show that we're actual business, and then not charge people? But we completely agree. The $7 a day, that is completely irrelevant at scale. And the race to the bottom is something.
You want to be the bottom.
Yeah.
Start at the bottom.
All right. Awesome.
Start at the bottom, now you're here.
Guys, this is super fun. Like, I could talk about this business for days. I could literally talk about. We
have been talking about.
We
this
talk about
for
real
years.
estate.
We didn't even get from contract to close. There's so much exciting software. Just once you get a contract to close,
And it's all automated, right? Like, I want to go through the process. I want to learn more about this.
You should list your house.
I'm not listing my house.
You should absolutely sell your house just to do diligence.
Do any of us have a house to sell right now?
Actually, we do.
The three of us have a house to sell.
We own a house together.
Oh, we do.
We should tell Robert.
Yeah, take it off.
You're done. He did not sell the house. It's been 6 months. He's done. We're selling it on ListingSpark now.
100%.
We should totally do that.
Yeah.
For at least like 90 days.
Absolutely.
6 months.
That'd be pretty fun.
I mean, before we took on the original capital was from a guy we knew who was operating a title company, and we were trying to shoot all our business there, and he was like, "This is awesome! I'm just making more and more money. How big can y'all get this?" Okay, we invested some money. After that, I can't tell you how many of the real estate investors who have come through the platform have said, "Hey, is there a way for us to invest in this?" Because these are people who are either hard money lenders and they're just investing in real estate in some capacity, and then all of a sudden they see an opportunity, something that's different. Like, okay.
Well, it's funny. Our A round actually came from a cold call. This guy, he was a make me move type thing, and we called him, and he was like, "No, I'm gonna do this on my own. But are y'all looking for some venture capital?" And so our sales guy, he held the phone up and he was like, "Hey, are we looking for venture capital?" And Brett was like, "Hey, I'll take it."
Well, listen, that is the one problem with your business model is that there are, whoever you think is in your business, I guarantee there's 500 others that are doing this on a very small scale in various regions around the country. And if there aren't today, there will be in 6 months. This is a grinding game of just actually executing like, knee deep, just getting in the market and working for the next 5 years and slowly pulling more market share.
It's not a fun concept, but
I mean, the good news for us is it's difficult for the viewer to say, "Hey, you just got to grind it out for 5 years," but we've seen how to do that. We've seen how.
Memory card full, maybe? There's some.
What's this?
Some message over there.
maximum recording.
Oh, yeah, we've hit the
Okay, we got. Do we have a
We have enough.